Hello everyone and welcome. Today I'm joined by John Scrivens, new build lead at Skipton Building Society, and we're going to be talking about the 100% mortgage, the track record mortgage. Welcome back to part 2. And as I said in part 1, I'm now going to ask John a key question. As you know, we are Just Mortgage's new build division. John, is it applicable for new build properties?
So the quick answer, yes it is.
Woo!
It is available for new build houses currently. So yeah, anybody looking to buy a new build property, absolutely, this product is also available for them up to 100% loan to value.
Absolutely fantastic, brilliant. So just want to clarify one point that I have seen come up a few different things across the internet is, do you have to buy the property that you're renting?
Okay, that is a really good question. And the short answer is no.
Okay.
No, this is because that would be tricky for a new build, right?
It would be very tricky, John, very tricky.
So no, this is so the really important bit is the 12-month track record.
Okay.
So I mentioned in the first part, the key part of eligibility on stage 1 is have they been renting for the last 12 months? Yes, great, continue. No, then unfortunately not applicable. So yeah, it absolutely is. And the interesting thing is from week 1, we've seen a number of applications come in already, and actually there are a large number of people that are currently tenants that are now purchasing that property that they've been in for quite some time. So I think it's, again, coming back to the purpose of why we're doing it, is absolutely great. It works.
Fantastic, brilliant. So just flipping back to the new build part, I know some developers that will be watching this and buyers of new build properties, incentives wise. So can customers still take advantage of builder incentives?
Yeah, and one of the great things about the product and our current criteria, there is no difference. So at the moment, well, earlier part of this year, we improved our incentive policy for financial incentives. That was the feedback we were getting from yourselves. That was the feedback we were getting from brokers, that our financial incentive policy wasn't quite fit for purpose. So what we could do now, and including on the track record product, is where there is a financial incentive, we can accept any financial incentive, providing it's stated on the diff, up to 2%. 2% or less than, we will not alter the loan size. So in effect, a client can go up to, through the track record proposition, 100% and still receive a 2% incentive from the developer.
Okay, all right, thank you. As you're aware, John, we do a huge amount with housing associations, housing providers. So I know one key question I'm probably going to get from them is, can those that are looking to buy a shared ownership property benefit from this product?
Yeah, so it's a really good question, and one that during the project we spoke quite a lot about. So yeah, everybody recognises, hopefully watching this, we are the only lender that's returned to the 100% market, and with that, we've been really specific about, as I said in part 1, who this is aimed at and who it isn't. Currently, it's not anybody looking to buy through a shared ownership scheme or something like that. It isn't applicable at the moment. Who knows when, should other lenders decide to join as well, then I'm sure you will begin to see, not just from us but from the market, some more flexibility around schemes and things.
Okay, fantastic. Another thing that we have seen, because there has been some mixed opinions on the product, is that there's going to be certain people in certain parts of the country that aren't going to benefit from this. How does Skipton kind of respond to that?
No. So it's a really good question, and again, kind of coming back to the main reason why we're doing this, trying to help first-time buyers into home ownership. I remember when I was 21 and buying my first flat. I mean, it was my palace, but to others it may not have been, and that was just a regular one bedroom flat. What we've done through the research actually is asked a series of questions. So we've researched 2,000 customers across the UK to understand the problems that they're currently facing, of which over half of them have said that they admit that the current financial difficulties that people are experiencing through the cost of living crisis is affecting their ability to save. And also 48% of the people that we interviewed said that they would be willing to forego something in a property different to what they're renting in order to own it. So, for example, somebody would be willing to move in
Okay.
order to buy their first property, or they'd be willing to accept that they need to go from a 2-bedroom apartment to a 1-bedroom apartment in order to own it. So that was really important. So I guess the impact is what we're seeing. In what we're seeing is a lower kind of average case size to what we'd normally see.
Okay.
But you've got to remember these are first-time buyers buying first-time buyer properties, which are in general worth less. However, saying that, in the last couple of days, we've seen a few larger average loan sizes come through decision in principles, and are also being approved. So I think it's really early days to say, is this, there's been some speculation in the media, but I think it's really early days to say, is this attracting, your average London first-time buyer? We just got to see.
Yeah. Okay. Fantastic. Thank you. So before we draw to a close, anything else that you want to add from Skipton's point of view?
I guess just some detail from the research, which
Okay.
I think is really important. So again, remembering why we're doing this, from the research that we've carried out, it's taken the average first-time buyer in the UK 7.9 years to save up their deposit in order to buy, and that's very different throughout the country. So in London, for example, it's 12.8 years. In the southwest, it's 10.4, and East Midlands is 8 years. And 8 years to save an average deposit it seems crazy. Actually, today, for a customer to save a 10% deposit, that's in the region of £24,607. So it's large sums of money. So absolutely, we feel that this answers the question for a lot of people, but not everybody, and that's really important. And the thing that I'd say to everybody watching, everybody listening, if you have clients that are currently renting and they've been renting for 12 months, then absolutely visit our website. The material there's feedback that I've received is it's really clear, it's really straightforward, it's really transparent, and actually we've had probably more customers than brokers contact us in the first week about this. So I'd encourage you to reach out to your client banks that are currently renting. Explain that there is an option if they've been renting for more than 12 months to get onto the housing ladder with next to no deposit.
Okay, fantastic. Well, John, thank you for joining me today. It's great to see another lender coming to the market with an innovative product, and I'll be really excited to see how this product progresses over the coming months. Thank you, everyone. See you all soon.